Hello and welcome to this weekly Outlook video at xm.com. I'm Maria Bachardes and joining me is investment analyst Marios Hadjikyriacos. We'll be reviewing the week ahead. So Marios, the euro area is still in a difficult situation as trade tensions and Brexit concerns are taking a toll on exports and investment. The preliminary PMIs for September are due out on Monday. What will this data mean for the euro?
Indeed, we've really seen the euro area struggle lately, particularly the manufacturing sector, which has taken the biggest hit from the trade war. Now, the ECB has been very active in all of this. It recently cut rates. It recently launched another round of quantitative easing. Unfortunately, though, monetary policy in the euro area is already exhausted. We've already had years of money printing, and for the situation to really improve and the economy to rebound, fiscal policy needs to start playing a much larger role. Now, having said that, the only nation in the Eurozone that has any real fiscal space and therefore the ability to spend is Germany, and we all know that Berlin does not really like to run deficits. Now, what does all of this mean for the euro? I think that any rebound, any sustainable rebound at least, is still far away. And in fact, we may even see some more weakness in the near term. And the argument is quite simple, really. German politicians have been very clear that we will only start spending if a recession hits. That means that the situation needs to deteriorate even further before any real fiscal stimulus is even considered.
Yes, I see. Moving now to New Zealand. Its economy continues to struggle, due in part to the US-China trade war and a worsening global environment. What do markets anticipate the Reserve Bank of New Zealand will announce next week?
The RBNZ is expected to take no action next week. It already cut interest rates at its previous meeting by a half point, which was bigger than markets had expected. So it has been quite active. It has been attempting to boost the New Zealand's economy, which is really suffering from low business confidence. Now, as far as the Kiwi is concerned, it's trading near multi-year lows. It really cannot get off the floor lately. And, well, how is it likely to react on the RBNZ decision? Assuming that they remain on hold, the Kiwi could spike higher on the decision because markets are assigning a small probability for a surprise rate cut next week. So a 20% probability that the RBNZ surprises and cuts rates. I think that is extremely unlikely. They already acted last time. They're probably going to take a step back and monitor what happens. So the Kiwi could spike higher on the rate decision. Now, as far as the bigger outlook is concerned, it's all tied to the trade war.
Yes. And now, finally, taking a look at the US. Data releases will begin on Monday. Are these figures likely to be a game changer for Fed policy or the dollar?
Well, for neither, I would argue. And the Fed has really been crystal clear. We are not cutting rates because the US economy is weak. We are cutting rates as insurance that the trade war and a slowing global economy don't start to infect the US economy as well. So we may see some volatility in the dollar on this data, but I don't think they're going to be a game changer. What might be a game changer are the trade talks in early October. The US and China are going to meet for another round of talks, and markets are really optimistic that something might come out of that. For example, there have been reports that a limited trade deal on specific issues can be struck as early as next month. Having said that, I'm not really in that camp. I don't think we're going to see meaningful progress. We've been here multiple times before, the two sides making optimistic noises, only for little of substance to come from the talks, and then the situation escalates again. So I don't think we're going to get anything real out of those talks. But having said that, I believe that markets could remain optimistic heading into those talks. So as we approach those talks, we may see risk sentiment stay quite strong in the markets, and that, for example, may help to keep risky assets like stocks in demand.
Right. Now, beyond all this, we have geopolitics to look out for. Tensions in the Middle East continue to boil, with the US and Saudi Arabia possibly preparing to retaliate against Iran. How do you think that could affect markets?
Well, let's start by saying that the situation is very unpredictable and very fluid. We might see more escalation tomorrow, and we may not see any escalation at all. So it's very, very unpredictable. Now, assuming there is some escalation, well, first of all, the biggest impact will be felt in oil markets. The price of oil would likely skyrocket because due to supply concerns. And to a secondary degree, we may see some effect in risk appetite overall. So, for example, in stocks or in safe haven currencies, in particular the yen, for example, might stand to benefit if we were to see another round of escalation.
Marius, thanks so much for joining me, and thanks for watching at XM.com.